Hi students, 12th Standard Accountancy, Chapter-6, Retirement and the Death of the Partner. Exercise sum number 5. We note Karthi and Pranav are partners sharing profit and losses in the ratio of 2:1. Okay, let's understand the heading. These three persons are partners in the partnership firm. Okay, who are they? We note Karthi and Pranav. Okay, these three partners are sharing their profit and losses in the ratio of 2:1, right? So, among the three partners, Pranav retires from the partnership firm dated on 1st April 2018. So, on 1st April 2018, all partners are decided to reevaluate their assets and liabilities for the current marketing value. Why? Because whenever a new partner's admission to the partnership firm or old partners, existing partner, any one of the existing partner retire from the partnership firm, as per the partnership terms and conditions of the partnership firm, the partnership have to reevaluate their assets and liabilities on the date of retirement or on the date of admission. Okay, as per the rule, the following the adjustment are to be made. Okay, the first adjustment is increase the value of land and building. So from these three adjustments, we need to pass the journal entry and prepare the revaluation account. Okay, the first transaction is increase the value of land and building by 18,000 rupees. At the time of revaluation of their assets and liabilities, their land and building value increased. Okay, land and building is an asset item, right? So whenever land and building increases, asset account also increases. Whenever asset account increases, as per the format, revaluation account is to be credited, concerned asset account is to be debited. Okay, so as per the format of the journal entry, whenever asset account increases, revaluation account is to be credited. Concern account is land and building. So land and building accounted are 18,000 rupees to revaluation account 18,000 rupees. What date we have to mention here? Here we have to mention the retirement date, that is 2018 April 1. Okay. The next transaction or next adjustment is reduce the value of machinery by 15,000 rupees. Listen, reduce means it decreases, right? So, decreases value of machinery. Here, machinery is an asset item. Okay, on the date of retirement, they reevaluate their assets and liabilities. So, machinery is an asset item. Machinery reduces means machinery value decreased. Or you understand? Whenever machinery value decreases, asset value also decreases because machinery is an asset account. So, whenever machinery value decreases, asset account also decreases. Whenever asset account decreases, as per the format, revaluation account is to be debited and concerned asset account is to be credited. So, the same date you have to enter here. Revaluation account at 15,000 rupees to machinery account 15,000 rupees. Okay. The third transaction is provide. A provision would also be made for outstanding expenses for 8,000 rupees. Listen, outstanding expenses is an liability item. Okay, so liability item, they forget to enter into the 8,000 rupees they made expenses, which means outstanding expenses means not made the payment. Okay, after that after 1 month later, they made the payment, that outstanding expenses 8,000 rupees provided. Okay, so outstanding expenses is an liability item. After they provided the outstanding expenses, outstanding expenses account is to be increased, which means expenses account is to increase. As per that format, outstanding expenses increases, liability account also increases. Whenever liability account increases, revaluation account is to be debited in reverse order. Asset account increases, revaluation account credited. Whenever liability account increases, revaluation account is to be debited, underline. So, which account is to be credited? Outstanding expenses, which means concerned liability account is to be credited. Okay. So you have to mention the same date here. Revaluation account debt are 8,000 rupees to outstanding expenses account 8,000 rupees. After you enter the given transaction to pass the journal entry, you have to leave some space in the journal entry. Why? Because what they ask here, pause the journal entry and prepare the revaluation account from the given information. So from the given three transaction, we pause the journal entry. Then we have to prepare the revaluation account, that means ledger account. From the revaluation account, you will get profit or loss on the revaluation account. That should be mentioned into the journal entry. So you have to leave some space for one transaction taken from profit or loss of the revaluation account, loss on the revaluation account. Okay, how much space you need to leave? Listen, all partners capital account and revaluation account you have to mention here. Okay, so who are the all partners? We know Karthi and Pranav. So three partners name, accounts and the revaluation account. Whether you got profit or loss, whatever it is, you have to mention revaluation account and three partners capital account. So you have to enter four accounts here, 1, 2, 3, 4. So for the four accounts, for that you have to leave as per the four partners account, enter here. Okay, so after leave some space, then you have to start the ledger account for revaluation account. Okay, so you know the format of the ledger account. Okay, you know very well the format of the ledger account, that is a debtor and a creditor. There are two sides you have to write particulars and the rupees on both the side. Okay, so how can you post the ledger account for revaluation account? What are the transactions related to revaluation account you see in the journal entry? You have to post it into the ledger account. Got it? So let's take the first transaction. So where is revaluation account occurs? It is on, whether it is debit side or credit side, the first transaction revaluation account is occurs on credit side. So what you have to do? You have to go to credit side of the revaluation account and enter the opposite account. Which is the opposite account? Land and building account 18,000 rupees. So you go to credit side of the revaluation account and enter land and building, always started by the word buy on the credit side. Okay, so buy land and building account 18,000 rupees entered. Then next transaction, second transaction, look at the second transaction. Where is revaluation account is occurs, whether it is debit side or credit side, it is on debit side. Revaluation account is on debit side. So you go to debit side or debtor side of the revaluation account. Okay, so here is the debtor side. Okay, revaluation account, and you have to enter the opposite account from the revaluation account. So which is the opposite account from the revaluation account? The machinery account is the opposite account from the revaluation account. Where is it? Where is the machinery account? Machinery account is on credit side 15,000 rupees. So you go to credit debit side of the revaluation account, debtor side of the revaluation account, you have to enter the opposite account, that is machinery account 15,000 rupees. You always start it to the word 2 on the debtor side. Okay, so to machinery account 15,000 rupees entered. Then you look at the third transaction. You have to look at the third transaction. Search where is revaluation account is occur, whether it is a debtor side or creditor side. Revaluation account is on debtor side. So you go to debtor side of the revaluation account and enter the opposite account from the revaluation account, that is outstanding expenses account 8,000 rupees. So you go to ledger account on debtor side of the ledger account and write two outstanding expenses 8,000 rupees entered. So listen, revaluation related transactions we entered in the ledger account from the taken from the journal entry. Okay, so all related revaluation account related transaction we entered, we posted into the ledger account as revaluation account. Now we are going to find out the balancing figure. How can you find out the balancing figure? Which side you have first first step is which side you have the higher value, that side you have to find out the total. Okay, accordingly, to debit side we have the higher value 15,000 plus 8,000. How much? 23,000 rupees. So you have to enter 23,000 rupees as a total, consider as a total on debtor side. The same 23,000 you have to enter into creditor side in the same horizontal line. After you enter the total on both debtor and creditor side, you have to draw double line below the total. Okay, which denotes total. Okay, then come to the lesser side, which means creditor side. Okay, creditor side you have to find out the balancing figure. Listen, debtor side you got the total, creditor side you got the balancing figure. Okay, as per that format, you have, how can you find out the balancing figure? You have to difference between, that is difference between the lesser value and total, you will get the balancing figure. Okay, so you have to subtract 18,000 from 23,000 total, you got 5,000 rupees. This is a loss on revaluation account. Listen, if you got total on debtor side, you will get loss on revaluation account on credit side. If you got a total on debit side, you will get the balancing figure on credit side. Okay, so as per the format, that 5,000 rupees you get the balancing figure or difference between lesser and total, you get the difference between them. The difference between the value is called as loss on revaluation account. You have to write that 5,000 rupees against by loss on revaluation account. Okay, if you get loss or profit on revaluation account, immediately transfer to the old partner's capital account or all partners capital account with their profit sharing um, old profit sharing ratio. All partners, listen, underline the word whenever you prepare the revaluation account. Listen, whenever you prepare the revaluation account in the ledger account, if you get loss on revaluation account, immediately transfer to that loss on revaluation account into the all partners capital account with their old profit sharing ratio. Okay. So accordingly, that 5,000 rupees transfer to all partners. Who are the all partners? Vinod, Karthis and Pranav. So that loss on 5,000 rupees, loss on revaluation account 5,000 rupees will be transferred to all partners capital account with their old profit sharing ratio, which is, what is their old profit sharing ratio? 2 is to 2 is to 1. How much loss they got? 5,000 rupees. Now you calculate that 5,000 rupees with each partner's old profit sharing ratio. Okay, 1 5 is 5, this 3 0 is added here. So 1000 into 2s are 2,000 rupees. Okay, then same 1,000 rupees you got, 1,000 into 1s are 1,000 rupees. Okay, so that 5,000 rupees loss on revaluation will transfer to Vinod's capital account with his old profit sharing ratio 2 by 5. Vinod's capital account goes to 2,000 rupees, Karthik's capital account goes to 2,000 rupees, and that 5,000 rupees loss on revaluation will immediately transfer to Pranav's capital account with his profit sharing ratio, old profit sharing ratio 1 by 5. Pranav's capital account transferred 1,000 rupees loss on revaluation account. Okay, so we prepared ledger account. We pause the journal entry and prepare the revaluation account from the given question. Do you have any doubt? Please comment it in the comment box. Thank you. Take care.